NVIDIA is always popular.
Yeah. And we recently covered our NVIDIA. And because it was a earnings trade and then we were done with it. And now we're looking at another formation. And really, what is this one? A 30? Or no, that might be a 14 or something like that. Yeah. So it's trying to hold its moving averages. This I've added just here lately. It's called the average directional index.
Mm-hmm.
And the slope of it tells you the strength of the move. If the slope is up, whatever the move is strong and is likely to continue. If the slope is down and the ADX is up, it tells us the strength of the move is, if it's up, the strength of the move to the downside is strong. So it takes a little bit of thinking about how you might use it. I would overlay it with something like, you could do it on a TTM squeeze or a stochastic or something like that. But what you want to do is, if you're in trend, then you want to see that directional index saying, yes, the trend that you're in is strong. And so right now we're in this space where we don't really have any kind of strengthening trend at all. But we do notice that whenever it gets into this low area around 20, things start to happen. So we would want to push it off into November, right? Now, earnings are November 25th, and the option chains expire on the 15th, I believe. So the trade we would take would be a trade that would move into earnings, but also we would cover it before the earnings space. So there are several positions that we could look at depending on what your risk profile is like. So the first thing is, one, we get to November. That's the butterfly we sold. We're not there anymore. Let's get to November. Let's see what the chains are telling us. A lot of action, right? Still pretty bullish, but all of a sudden now we've got some of these big numbers up at 105, and look at this one at the big fat round number of 100. There's 43,000 of them there. And so what this is going to be is the trade that says, if we get ourselves some kind of big move, this price action is going to take us into these edges. The first and least risk tolerant would be the short iron condor. And we'd go all the way down to 100,
okay,
to 95, and we'd go all the way up to 130 and 135. Okay, so what this gives us is almost 50% of the entire spread. So what we want the chart to do is leak. This is also a high probability trade in my mind. Notice we've got low deltas, 30 or less. Some guys like to use 20. And we are focusing on deeper fades because of any potential worries that we might have. So this is what we're looking at here. The delta here is 16, so that's super strong. And we're collecting $2. So absolutely love this, on top of the fact that our directional index is suggesting, listen, we're not really going anywhere. It might go up, but it might come down, and it might go up, but it might come down. Okay, so that's the strongest one in terms of being least risk tolerant and most likely to erode. So you want about a 50% profit margin there. And when it erodes to about $1, you get out and you leave the trade.